Welcome back to this course on F&B. We were looking at F&B revenue. So the F&B revenue, we have seen the food revenue and beverage revenue, where food revenue together with non-alcoholic beverage is considered as food revenue and is divided into by venue, the in-room dining, banquet, or other food revenue, minibars. And some similarly, beverage revenue is alcoholic beverage revenue, which is also divided into venue, in-room dining, banquet, in minibar, and other. Now there are sometimes guest recoveries, there are complaints, service problems, food is too cold, food is too hot, is not tasty, and the service is very slow. So all those kind of reasons, the service peoples usually give rebate on the total bill that the guest does not have to pay. So it can be either 100% waiver, it can be a discount, it can be a free complimentary item. All those items, all those discounts are shown as allowances, as a deduction from the revenue. So let's say if any item is given as a free, let's say the guest has a problem and you are giving the ice cream as a cost, as a free, as a guest recovery. So you would be recording the revenue in the food revenue, and the item, which, because this is a complimentary, you would be showing it as an allowance as well in the negative way. So the impact on the total revenue is not going to be there. However, because usually we are comparing the cost of sale with the total food revenue, not after the allowances, before the allowances. Usually you will see, if you are not doing that and there are a lot of recoveries, the food cost percentage will be affecting quite a lot, and it will lead to the wrong decisions by the outlet to control the food cost, when maybe the food cost is already in control. The problem actually is in the service. So that's why the total revenue is recognized first, the total cost, the total check, the total before giving any discounts, and then any discount or recovery or complimentary item is recorded as allowance. Usually in practice it does not happen, because the systems are not designed in the way that to record the total revenue at the guest check. Let's say, for example, if there is a guest check which is already printed, now before the settlement, the guest is complaining and the service manager go there and say, okay, I give you 20% discount. So you normally charge 20% discount on it, and then you will be recording only the net amount. So in that case there is no allowance, but actually there should be an allowance, right? So normally the systems are not designed in a way to capture the total revenue and allowances separately. However, if, let's say, after the guest has paid it, or maybe the revenue is recorded, the amount has been charged to the guest folio, the next day the guest is complaining at the time of checkout, then the F&B department or the front office department is giving in rebate. So those part can come as an allowance, because there are ways to capture it from the system. But usually the discounts which are, or complimentary items which are given at the same time of the settlement or before the settlement, are not able to be captured as allowances. So you have if there are many such instances, which you can see from your point of sale report by looking at the discount key factor or the complimentary items. If there are a lot, normally the food cost controllers would adjust the food cost reports to reflect the real food cost, which is not shown in the profit and loss statement. So you have to be careful here by recording allowances. You should not be assuming that all the allowances are recorded automatically here. You need to actually go check in the system if all the allowances because of service recovery is given. Now you may give allowance because of promotion. So let's say you are running a promotion on buy one get one on pizza. So that is not an allowance, because that's not really a service recovery issue. Then the revenue will only go for two pizza in the revenue itself, not going to allowance. But if there is a service problem, if the normally you are selling only one pizza for the price of one, and the guest is complaining the quality and you are giving them another pizza for free, then in that case the cost of that pizza will be the revenue of that additional pizza will be shown into the revenue and also in the allowance. Or maybe you are giving a 50% discount, so that 50% discount will be shown as allowance. So there is a difference between different type of allowances. So normally the income auditors are in charge to make sure that this practice is being followed. They have to look at all the discounts given, all the complimentary items given. If they are because of the service recovery, they normally have to add the revenue back to the total revenue and show it as an allowance. Certain hotels practice this, certain hotels don't practice this. So if you have been not practicing it, you may want to change it, because that's a very important criteria to judge the food cost efficiency. Food cost, when you are normally calculating, which we're gonna see in the next video, will be calculated based on total food revenue, not the revenue after the allowances. So that's the difference between the total allowances, how allowances are gonna impact your food cost. Then there are other revenue items, which is audiovisual. Now audiovisual have certain criteria, as you will read on the screen as well. If let's say the hotel does not have a food and beverage department, and it's giving the rent projector on rental or to use in the guest room, it will go as other revenue, miscellaneous income. But if they have a food and beverage outlet, then it will go in, the revenue will go here. Now there are certain situations where the hotel may have the equipment in their inventory and they are charging it to the guest, so there's no cost associated with it. But if let's say the hotel does not have the equipment, it may rent the equipment from a third party and then give it to the guest at a margin. So in that case, the revenue will go into the revenue, and the cost of that rental will go as a cost of audiovisual, not the net revenue. Will go into the revenue, not the net margin will go into the revenue, which is normally practiced by many hotels. And this is a point of contention between management and operating parties, because the management fee is usually based on gross operating revenue, not on the plus the net profit. So if you record the net amount, the gross operating revenue will get reduced, which is not correct as per the management agreement. But if the guest has made a direct arrangement with the service provider, where the cost, or where he is supposed to pay to the supplier, pay to the contractor by itself, however is giving a commission to the hotel for helping him set up the thing, let the third party come into the hotel for setting up the charges. So hotel normally charge a commission from the service vendor, maybe a 20% commission, 30% commission, or whatever. But the risk of non-payment, or because of the reduced charges because of the service problems, is lies with the contractor, not with the hotel. In that case, the revenue can be recorded net of the cost. So means the total amount collected by the guest minus the amount that the hotel is paying to the service vendor. So in that case, that's fine, you can record the net. However, if the guest does not know the third party service provider, hotel is responsible for the quality of the equipment and also the servicing of the equipment, and also for the collection, the setting of the price. Then in that case, the total revenue which is collected from the guest will be considered as audiovisual revenue, and the amount which is paid to the third party for rental will be considered as cost of audiovisual. So that's the audiovisual amount. The next line item you have is the function room rental. The function room, usually the hotels are giving guest rooms or the function rooms as a rental for holding the meetings, for small parties or anything else. If let's say the hotel has charged anything for, usually for a decoration, for setup, or for any special requirements by the guest, they will be charged as function room rentals. If the hotel has used a guest room, which is normally you will charge a guest rent day rental, and the revenue should go to the room revenue. However, if the guest has taken a guest room for a service party, and they have ordered also food and beverage revenue or the things from them, then usually the function room rental will come here. So what the room department will get? Basically, room department will not get anything in that case. However, if there is no F&B revenue being charged to the guest, just only the guest room rental, then it will be considered as day use by the guest, and all the rental will go to the rooms department, not come to the F&B department. So that's the thing with the function room rentals. Then all the cost related to the setting up the function room will go to the banquet expenses in the operating department revenue, which we will show separately. Then you have cover charges. Now the cover charges usually are entrance fees, plus also sometimes there is a minimum spend by the hotel. Let's say for a small function room or a private space, the hotel can say, okay, you can use this, but you need to spend minimum $10,000 or $1,000 or $2,000 for spending on this outlet. But usually you will see the guest are, if the guest has spent more than that, then everything will go to the F&B revenue. But if the guest has spent less amount than the minimum specified amount, the hotel may charge additional amount to cover the minimum spend. That additional amount will go as cover and other charges. Now it also includes the entrance. If they say there is a pub, there is an entry where you are charging for an entry fees. In the entry fees, usually you are not giving back anything. So there are two types of entrance fees. One entrance fee, you say, okay, you need to pay $2 for an entry fee, but you will get a soft drink or a beer in lieu of that entry fee. So basically you are not charging for an entry fee, you are charging for a drink. So the cost, the revenue will go to that particular food revenue or a beverage revenue. But sometimes if you say that, oh, you have to pay $2, but you don't get anything actually. You just have to come entry, and then anything extra, beer or soft drink or food, you have to order extra other than additional from the entrance fee. Then that amount will go as cover and other charges. Then you have service and service charges, as we discussed in the room department as well. Usually the hotels are charging service charge, especially in Asian countries where the service charge is traditionally mandatory for the guest to pay. They don't have a choice to pay. So if that's the case, then all the service charges which are earned by the hotel will go to service surcharge and service charges, and whatever amount you are distributing to the staff will go to the labor cost. But if the service charge is not mandatory but is discretionary for the guest to pay or not to pay, then that amount will not be considered as the income of the hotel, but it will be mostly meant for distribution to the staff. So the guest can say that I want to pay $10 extra for the server who served me during today. So that $10 are gracious, not discretionary, are discretionary. So that cost will not come as a revenue, but will go directly to the liability account from where they will be paying to the concerned staff. Then you have miscellaneous other income. Any other income which is generated by the by the restaurant, by the pool, by the pub, by the bar, which is non food and beverage, will be considered here. It may also be apparel, logo, merchandise. You are selling certain items, maybe cups or plates, or you are charging for a breakage. Then those items will also be coming into the miscellaneous other revenue. And then the allowance, as we discussed in the food revenue, allowance related to the audiovisual, room rental, cover charges will be considered as allowances in this line item, but not the error in accounting. Error in accounting is usually adjusted from the revenue directly. Then you will have total other revenue, which is a total of food revenue, total of audiovisual, total of function cover charges, service charge, and everything else. So that's the total food and beverage revenue. So that was the food and beverage revenue. Next video we're going to be covering the the costs.